Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you as always for coming on.
Happy to be here.
Well, U.S. stocks had a strong recovery overnight with second quarter earnings coming out from major companies and hope for a recovery in the economy, not to mention news of a vaccine. What's the story in the global markets today?
Okay, well, as you mentioned, the U.S. markets all had a very strong Tuesday yesterday. Dow went up by 2.13%, S&P went up by 1.34%, Nasdaq went up by 0.94%. And the reason, well, partially there's still a disconnect between real economy and the stock market. So there is still some concerns about the bubble there. The early earning reports are coming out. The results are mixed. The banks are where the investors are keeping their eye on right now. There are some banks like J.P. Morgan Chase, which did better than expected, but some have cut dividends like Wells Fargo. But right now, the expectation on these earnings are so bad that any good news, I think, is overblowing the market. Any good news has a larger impact than it should. And then some other reasons why the market improved. There was an announcement by a Fed member yesterday that they will continue the expansionary monetary policy, and there's a lot of expectations that the Congress will extend the unemployment benefits and give further stimulus to the economy. So that is working on the optimistic feelings by the investors. And not the U.S. The U.S. situation is worse than ever on coronavirus, but the rest of the world seems to be starting on a solid path to recovery. So that is also somewhat feeding into the optimistic side of the market. And of course, there's a good news of vaccine. Some of the trials seems to be going very well, but that news hit after the U.S. stock market was done for the day. So that affects foreign markets, but not necessarily the United States market, though that may give further rise to the U.S. stock market today. The European markets, again, following the U.S. market as well as the vaccine news, they're up. The Japanese market was also up today, but the Chinese markets, the Shanghai and Hong Kong, does not seem to be doing that well, possibly because they're having a lot of flooding problems right now. And Kospi and Kosdaq, they also rose. Kospi rose by 0.84% today, Kosdaq by 0.37%. That partially represents the optimism from the U.S. markets. I think it also reflects partially the New Deal announcement by President Moon yesterday and the vaccine optimism that we saw on the Japanese and European markets as well. So overall, fairly good day today, except for the Chinese markets.
Well, Professor Young, we've seen oil prices coming back up the past couple of months. That means more expensive imports for Korea. But then we have one of Korea's main exports, semiconductors, fetching lower prices abroad. What's going on there?
Okay, well, let's start with the oil prices. Yes, the rising oil prices mean bad news for Korea's trade accounts, but it may signal some optimism because it implies that the global economy is coming back. The consumption of oil, which can lead to consumption of other products, it seems the global economy is recovering. So that is probably the reason why the oil prices are rising. So there is some silver cloud in that particular lining. And then for the semiconductors, well, the semiconductor prices are down, but the volumes are up for Korean exports. So Korean semiconductor exports are down only by 0.3% for the first half of the year. Now, the reason why the prices are rising is twofold. First is that for the first half of the year, because United States and Europe have been in a lockdown where people were working at home or trapped at home, they're doing a lot of activities using the internet. So not only there has been increases in sales of computers and tablets, but also companies and media companies like Netflix, Disney Plus, they have been expanding their servers and their networks. So that means there's a lot of demand for semiconductors. And then in the first quarter, there has been a lot of hoarding of semiconductors. After the global users of semiconductors saw what happened in China, the production shut down, they started hoarding a lot of semiconductors, and that accounts for a lot of price rise earlier in the year. So that accounts for the rise in prices for the first half of the year. But the prices right now for the last few weeks have been dropping. And that's because, in most countries, lockdown is now over, so they do not need to invest as much in these servers anymore. And then as I mentioned, there had been a lot of hoarding, so the semiconductor users now have a lot of stockpile of semiconductors that they can use for the rest of the year. So Samsung and SK are actually somewhat concerned about their business for the second half of the year because they expect the price to continue to drop.
All right, well, we're almost out of time, but we do see foreign direct investment in Korea down in the first half of the year. What does that mean for the local economy?
Okay, well, the government is emphasizing that, yes, the FDI is down, but it's not as down as other countries. The UNCTAD, the UN organization, estimates that the global FDI will fall by 40%. U.S. during the first quarter fell by 35%. Japan in the first quarter fell by 80%, but Korea only fell by 23.9% on a realized investment basis. And they note that there has been successful FDI in electronic commerce, IT industries, medicine, R&D, and logistics services. So they're actually framing this as a fairly optimistic news. But still, it is true that investment, not only FDI, but domestic investment has been down in Korea even before the coronavirus. So we really have to focus on why are people not investing in Korea, not only foreign investors, but domestic investors. And we need to make businesses more profitable. We need to make the economic environment more attractive for investment. This goes for FDI as well as domestic investment. It's the same disease, looking at it from two different views.
All right, Professor Young, we'll have to leave it there for today. Thanks so much for sharing your insights.
Thank you.